All right, welcome to episode 4 of season 1 of the Stratton Mortgage podcast. I'm Bill Seach. With me today is Trey Reedy and Adam Baumline. And Tom, our illustrious partner and leader, is on vacation. So we're going to do this one without him. And we're going to talk a little bit about things, I think that how we start out doing a mortgage application with a customer that's new, that might be referred to us from a real estate agent or my son's teacher customer, or whoever. Yeah. So Adam, you want to go into that a little bit about?
Yeah. So we've got an online application that you can go to our website and get it, or it's underneath our email addresses. We email you, but it's a very easy, simple online application to fill out. It's optimized to a cell phone, to an iPad. So if somebody's not in front of a computer, they're not an iPad user, that's okay. If they've got their cell phone with them, whether it's an iPhone or an Android, that doesn't matter. It's optimized to all those devices. So very easy to fill out. It allows us to capture the information electronically for you. It does allow us to go ahead and obtain a current credit report on the borrower, which is nice. It does give the option to electronically verify assets right away, which is nice, and order an automated verification of income. So really it's allowing us to get all the pertinent information up front that we need to make sure that we're putting the correct information into the system to get a good answer. So, a lot of times what I'll tell people is, the automated underwriting system in general is pretty much the same for everybody if there's no overlays. If you're putting bad information in, you're going to get bad information out. If you're, for example, so if somebody says that they make $5,000 a month, but once we get their income documentation, they make $4,800 a month, maybe they don't qualify with $4,800 a month. Maybe they only qualify with $5,000 a month. So...
But we have the ability to tweak that too as it comes in, right?
We can change it, but the point being, if somebody
try to do it electronically,
electronically, and they just put a number in there and fill it in online, and then they say, "Oh, hey, great, you're approved." Well, nothing's been validated, and then that's where the problems can come into play. Oh, well, we didn't know you're on commission. We got to average your commission 2 years, or you put in your hourly plus your overtime, and you haven't been receiving overtime long enough to qualify. So
you have to have overtime for 2 years.
2 years, yeah.
2 years to average that extra money, right?
Yeah, to be able to average that. So, or if you're getting a bonus, if you just started a brand new job and it's a bonus heavy job, you're not going to be able to use that income, right away. Well, if the consumer doesn't necessarily know that, they're just going to input that in. Okay. So, just allows us to really verify everything and make it easier for the borrower, right? We want to make this process
easier, meaning faster.
Speed and accuracy. And if we're electronically verifying income, they're not going and digging up paycheck stubs, W-2s, things like that unnecessarily. Sometimes, we do have to get those things. But if we can go directly to the employer and get all the information without them having to do it, saving them time for the speed part of it, it's definitely more accurate because we have the exact information that we need.
Right.
And then we essentially are giving a really accurate,
And that takes us to a deal that you recently had, right, where you don't have any conditions on the file,
So we just submitted it on Friday, on my birthday, actually. We electronically verified income. We electronically verified assets. These borrowers were putting 20% down, and the property qualified for an appraisal waiver.
That's no appraisal.
So that means they did not have to get an appraisal on the property. Literally came out of underwriting within 6 hours, and I needed the title work, which we had ordered but didn't have back yet, and they had to choose a homeowner's insurance agent.
Now, is there, Trey, do you know, is there a correspondence between having an appraisal waiver and a credit score? I don't think there is.
Not necessarily.
So. It's more.
Well, you got to be a conventional loan. Yeah. It's more about the property. That's more about Fannie Mae and Freddie Mac collecting data and having that data. The system automatically derives that. As to whether or not we're going to get it. So it's not necessarily like oh, well, somebody makes a ton of money or somebody has, a large amount of assets in the bank.
Now, did that customer come through Blink?
Yeah, so they actually applied
actually,
everything through Blink. Now, in their case, the other piece to Blink is they actually did upload their paycheck stubs and W-2s in there ahead of time for us. So you can do that too, which is nice. So if you do need to provide that information, you can upload all that stuff in there for us. So we have everything right away. That way, the customer is ensuring that they're getting the most accurate pre-qualification that they can, or pre-approval if we send them to underwriting. So
that's awesome. So, all right, next topic, right? Let's move on to with that company that also has some sort of reduced mortgage insurance and things like that. And I know when you either shop rating or guaranteed, different companies, when you try to get mortgage insurance is when your loan amount is above 80% on a conventional level.
Yep.
But this one has this particular lender has reduced it across the board for us.
A lot, actually.
And shed a little bit of light on that for us. In terms of percentage, like say, is it 70%, 80%? What do you think?
So we, Trey and I just pre-qualified I think it's about a $500,000 purchase, wasn't it?
It was $450.
$450 with 20% down, or not 20% down, putting 10% down, and the mortgage insurance was really, really inexpensive. I think it was like $52 a month or something. There's a factor that's involved there, but
sure.
The point of that being, they have internally removed some guidelines and overlays that other mortgage insurance companies would have, and it's allowing it to be cheaper, number one. Number two, they're issuing the mortgage insurance certificate themselves, which is important because a lot of lenders, once your loan is ready to go, you still have to meet the guidelines of the mortgage insurance company. Now, that's all behind the scenes with the underwriter, but there are times where the loan will get done and then the mortgage insurance doesn't meet their guidelines, especially with the recent changes. It now varies or changes whether you have one or two borrowers. Debt to income ratio can come into play, type of property, stuff like that. So
that was 90 LTV, 90%, 10%
90% loan to value.
Okay, and that plays a factor too because you have the 97% where they're a little bit higher, and then the 95, and then the 90.
Yeah, so it tiers down.
85. Yeah, so it tiers down. Well, I just want people to understand if they're gonna, when they're buying a house, how's it work?
Yeah. So let's say somebody's, in fact, I just took an application today. He was debating on whether he wanted to put 20% down or if he wanted to put 15% down. And the mortgage insurance was really inexpensive. It was like $30 a month. I mean, it was negligible.
Like lunch.
It wasn't bad. And I said, well, here's your two options. Let's pro and con both ways. Obviously, if you're putting 20% down, you don't have as much money in the bank right out of the gate if you need to do some repairs. If you put 15% down, of course, you need to pay that minimal mortgage insurance, but you do have to pay it until you reach 80% or 78% of the value of the property. In his case, he actually chose he's getting a gift, but he's going to get a gift to get the extra money to do the 20% down. He didn't want to pay the mortgage insurance. Now, I did run that through to see if he'd get an appraisal waiver, which he didn't get an appraisal waiver, but we can do that enhanced appraisal process where for $175, they'll go get the data, and if that's enough, then that's all they need to do. Or at the most, it's $290 versus.
So it's like an internal appraisal.
Yeah, it's something special that they have, and just making it easier. They're still getting the data, but it's making it cheaper and easier for the customer.
How fast is it?
We get that back in 2 or 3 days.
2 or 3 days.
Yeah, so it's really, really quick.
As opposed to a 7 to 10 day process for a
depending on time of the year and where stuff like that.
Although we've been pretty fast with them, like I said, it's we just got one back in 3 days. It was nice, full appraisal. You know what I mean? So but still, reduced cost is good.
Reduced cost, reduced mortgage insurance. So maybe you get in a situation where the payments is a little bit more than what you want, or you're really on the borderline. Maybe that's one of several factors that makes a difference for you. Is that hey, you know what, mortgage insurance with what we can obtain for you versus a direct lender or a bank, maybe it's cheaper. you know, and that might make the difference of you know, buying the home. You know, some people kind of have a hard stop on, you know, I'm not spending more than X amount of dollars on my payment.
And just to be clear, too, that's conventional mortgage insurance.
That's on a conventional loan, yeah.
Right.
Yeah, on a conventional loan.
The FHA is still the 0.85 times the loan amount divided by 12. So it's a little bit more for the FHA.
FHA's, yeah, unless they put,
5%
down or 10% down and be reduced. But,
right.
So that would kind of lead into, you know, the ease of that technology. We actually do have a cell phone app that has the system to apply in there automatically. But within that cell phone app, you can also run mortgage payments, which if you save them, we can see them. We can double check them for you.
And the calculator is very cool.
Yeah,
I like that.
Yes. It's got a calculator. You can securely upload documents. So we need a picture of your driver's license. Man, I'm going to get it to you. I really don't want to text it to you. It's kind of weird.
Yeah.
I don't really. Hey, no problem. We have this great cell phone app. This is secure. It goes right into our system, you know, and then we'll go download it.
Sure.
So depending on, you know, maybe somebody has all their documents printed out at home. They don't have a scanner. You know, fax machines are not as prevalent as what they were,
right,
you know, 15 years ago. That's an option for somebody to get documents to us. So we use that as another tool for, you know, borrowers to be able to make it easier.
So even when you're shopping for the house, you take that with you, and you walk into the open house or whatever, and you got the taxes on the tax card. You know what the taxes are. You plug in the payment, the price of the house, right then and there. You know what the payment's going to be before you even leave the open house. It's pretty nice.
Yeah. And we can double check it for you. So literally before you even put an offer, you know, and some people have even went and shopped their homeowners insurance. You know, you might know what your mortgage payment's going to be within $5 before you ever even put in an offer. So from a peace of mind standpoint, that's nice, right? Hey, I'm going to buy this property. I know this is what my payment's going to be. I don't have to have any surprises or worries at the end. Making it more streamlined process, but again, making it easier for the customer to have the confidence that, you know, it's going to be what they want to do.
And we'll provide that to whoever for free. It's not like, you know what I mean?
Yeah, it's free. Yeah, you just download it. Doesn't cost anything.
Right.
You know, anybody can
just give us a phone number. We'll text it to you.
Yeah, we can text, email, whatever. Yeah,
although your
super
pictures
easy.
on there, so it's
yeah,
if you want to,
might be a little scary.
You got to look at me. Yeah.
If you want to pay for the app, we'll take the money.
yeah. We'll put an escrow account or something.
Right. Okay. Cool. So, what's happening this week? Deals of the day. Let's talk a little bit about that.
So that my deal of the week really is that one that I talked about.
Yeah, that's awesome.
You know, they e-signed everything. We got them a great rate. We actually got them lower than a competitor's offer. So they got a really good deal on the loan. They didn't do anything to verify their income. We did that, but electronically. But they clicked to, you know, fill their information out to automatically verify. They e-signed their documents. Boom! Essentially, they're done. I mean,
I bet you get a lot of referrals from them.
It's great. Yeah, they were like, wait, we're already approved. Yeah, that's
right.
Crazy. I'm like, yeah,
how'd that work, right?
Yeah.
That's awesome. I had one today. Well, not today, but this week where we sent out our CD for closing, and it was supposed to close last Friday. And oh, by the way, I got married.
Oh,
not me.
Yeah.
The customer decided they got married between the time we took the application and the CD process, and forgot to tell me. So that's something. People, please, if we're doing something in terms of loans and things like that, tell us if you're married or not. I mean,
well,
and they weren't when they started.
Tell them why, because Ohio is a tower law state. So if they're married, regardless of whether or not your spouse is on that loan,
they still have to sign.
They have to sign dower rights, knowing that you're taking that loan,
and vice versa. If you're separated, I mean, you're still married. She still has to sign off.
Yeah, until you're legally divorced.
Now they're trying to change that, but it's not done yet.
That's not everywhere, but it's
in Ohio.
There you go. It creates complication with trying to get your loan done.
Oh,
it's not a big deal, but
yeah, just delayed it for a week. But and that brings me back to the CD process. You know, before you can close your loan, 3 days prior, you have to sign the exact document you'll sign at closing. So,
or a worst case,
case scenario, which. If they didn't balance the CD or whatever, but keep in mind you always need that 3 day period, and information has to be accurate. right?
Yeah,
Would you agree with that?
yeah, and that's
kind of what I ran into this week. I was like, married? What?
well, that has to be accurate. Now, with our CD process, that's electronic signature too, so we can get that out early. If
And
needed.
that's when it might be different or
Yeah,
higher.
might be worst case scenario because we haven't.
Right.
We don't have all the final fees yet. It's not balanced with the title company, but we can go, hey, let's go worst case here, give you worst case figure.
Right. So once you have your appraisal and your CD base or appraisal and your title work, you can send out that CD.
Homeowners insurance and anything that's going to affect your payment or your
right, and that gives you the 3-day wait period start. And it's just, if a lot of times when people are moving and things like that, and they have this house contingent on another house, and that's happened so many times. You know what I mean?
A lot,
so,
yeah.
It's always good to be very thorough about things that happen in the process.
Correct.
Anything else today, guys?
Got any Trey's words of wisdom?
What about credit repair, Trey? You got anything for us on that front? I mean,
credit.
Well, I pulled a credit report. I got a 614 and a 618, and I got 2 collections on it, where the guy told me he already paid them. Can I get those scores up? Is that an easy thing to do, or is it a hard thing to do?
Sometimes it depends on the collection. Sometimes.
Well, it's credit. They're both credit cards.
Both collections 4 credit cards.
Yep.
Not charge it off.
Not charge off.
Settled for less than owed.
Well, he says he's paid them, but
That's.
I need basically. Well, I mean, we could do the 618 or the 612, but in best case scenario, we get above 620, right?
Yeah,
so
pricing.
It changes pricing, but you can also open up to the 1% down, the 5% grant, and all kinds of
programs.
other things that he won't get at 614.
Yeah.
Well, the only thing that I caution people with in terms of collections and stuff is it depends on the last date it's reported. So when you pull that credit report and say the last time it actively reported on your credit report was 6 months ago, 8 months ago. If you try to dispute it, it may not be actively reporting, but when you dispute it, then they automatically, whatever the collection agency, they'll report it, and it might actually ding your score even more. So sometimes it's actually best
I'm not saying dispute it, but if I take the
or sometimes
proof,
if you pay it, sometimes if it's really old, so you've now taken a derogatory that's not necessarily affecting the score, and it becomes a paid active derogatory.
It becomes current.
Yeah.
That hurts the score?
Well, that's where we use the what-if simulator and say, hey,
right,
if we do this, what is the most likely outcome? It's not 100% guaranteed, but it's pretty dead on.
Right.
What do we feel is going to happen here as long as everything else remains status quo?
And then we provide the information for.
Yeah, we have to provide the credit bureau with proof of payment, and they can go and
update the score.
Update all that. Yeah.
Awesome.
So
yeah, it's not that far off. I had one that was 1 point off one time, and I just called the credit company. They're like, "Well, if you're 1 point off, I think we can make that adjustment." And they found like the simplest thing to do it, and it worked.
It worked on there.
So.
Yeah, if you have a 579, you need a 580. I've had that happen.
Right, more than once.
Yeah, or
right?
you have it can happen. So.
They don't all work the same though.
And just to reiterate, we do go down to 580, and one lender goes down to 500 now. Mm-hmm. So the subprime market is opening back up. We're seeing a lot of non-owner occupied, stated income loans, stuff like that. Now you have to have a big down payment, but that's the thing that's going to come around now for the investor that isn't ready yet, but wants to, and they don't know, but they got a big pile of money. That could be something, they buy a rental real quick and easy.
That market's coming around.
It is. So, but I think that's it for today. You got anything else?
I do not.
Trey?
Nope.
Everyone has a wonderful Valentine's Day.
Oh, yeah. Happy Valentine's Day.
Nice and rainy.
Yeah. Well, we don't know. Are we going to get rain? Are we going to get snow? Are we going to get the wintry mix? We don't know here in Ohio.
Could get 85 degrees.
Yeah. We're not real sure.
Well, happy Valentine's Day, and we'll see you next time.
Thank you.